everyone, welcome back to my channel. In this video, I'll be covering the main differences between a stop loss and trailing stop order. I'll break down the elements of each one, and I'll provide examples of how to use the stop loss and trailing stop to your advantage. Lastly, I'll showcase the pros and cons of both, so let's go ahead and get started with the definitions. A standard stop loss is simply a price target at which you have pre-selected as a value to sell at. So all this means is that a stop loss is your preset risk tolerance for a trade. So if you're willing to risk losing a certain percentage or dollar amount, if the stock hits that target, your position in the trade will be sold. On the other hand, a trailing stop point is a selective value above or below the current stock price that dictates the level at where you're willing to sell a stock or ETF, whatever you're trading. And what makes the trailing stop so unique is that it follows the stock's price directionally. Essentially, the trailing stop increases or decreases as the value of the stock price rises or falls, depending on what you choose initially. And it'll reach a stopping point if the stock reverts and the trade goes against you. So let's take a look at this in an example. Okay, so this is a replication of a standard stop loss trade. On the screen, you see an entry price level set at $40, and the stock motions up and down within a 30-minute period. In this example, over the course of time, once the stock falls and reaches the red line, this initiates the stop target. Therefore, the stop price point shows the level at which the position is closed to sell at. So as the price declines and eventually reaches that $20 target, the position will become a market order to be sold. And you can adjust the level while actively in a trade. However, if you don't, the stop loss will remain at the given point you initially indicated. So now let's contrast this with the trailing stop illustration. So now on the screen, you see the same example of the price entry at $40. Similarly, the stock motions on an upward trend. But because the stop type is set to trailing, you can see the trailing stop is following the stock in the upward momentum, and it will continue to follow so long as the stock rises. Once the stock starts to decline, at a selected level of course, the trailing stop will not go down with it. At the decline of the stock, the position is then set to sell. Now this also works in reverse, so vice versa for like puts. If you're putting in a play for puts, it'll do the same thing. It'll follow the stock down, and then of course if the stock rises up at that given or selected point, either a percentage or a dollar amount, it'll go ahead and place you in a trade to sell that particular position. So just keep that in mind. So now let's replay this example to look at the dollar amount that could potentially be set so you can see the exact trigger. So at this point here at about 9:22, the stock price falls to reach the $64 mark. With this being the predetermined trailing stop point, all the profits made up until that point, of course, are able to be secured because the trailing stop chased the stock price on the way up, but it does not move on the stock price's decline. So that is exactly how this works on a trailing stop order. All right, so now that we have the understanding, it's important to note the trailing stop determination. This is known as the trigger delta. So on the screen, you see the illustration with a gap between the entry and trailing stop. Now note, you are able to modify an order while you're actively in it as mentioned, so this level can be adjusted, of course. So with this example, if you set your trailing stop to $8, it will follow the stock by $8 under. If you set a percentage, let's say 5%, it will follow the stock by that 5% until the stock declines as mentioned. So now let's take one last look at these examples side by side, because some may be actually surprised to know which of these order types is the better choice. Okay, so let's have all things considered equal as we compare both order types. So let's say you place both of these trades at the exact same time, and you had to walk away from your computer or your phone, and you let the trade play out exactly the way it did. If you were to place a regular stop loss, as you can see on the left, you'll be able to take profits at whatever preset level you selected. But if you place the trailing stop order on the right, the trail stop follows your profits on the way up. And again, you're able to lock in the set amount at what will be considered your take profit target as the stock moves up. And again, the advantage in this is that you don't run the risk of losing your profits as the stock drops. Now, it's widely debated on which one is more effective and which order type is the most profitable. If you're new to trading, I would suggest testing both methods out first by using the paper money trading demo in Thinkorswim. That way you can see how these two order types can fit into your trading plan. So now I'll show you exactly how to place an order for a stop and a trailing stop in Thinkorswim. So let's go ahead and jump over there to that platform. All right, so I have Amazon pulled up here on the chart. So in order to place an order for a stop, I'm going to go ahead and click under options. I'm going to scroll down a bit, and you guys can see here, we see currently Amazon is trading for 183.18. I'm going to go ahead and say, for example, we're going to make a play for calls. So let's say we think the stock is going to rise to maybe 184, 185. I'm going to go ahead and click on the bid price because, again, buy the bid, sell the ask. I'm going to hit next here on the right, and now it pulls up the order editor. So you're able to adjust and modify this as you see fit for your trading plan. Under limit, you can hit the drop down and then, of course, hit stop. And you can also change it if you don't want it to be for day. You can have it good till canceled. Totally your choice on that. And then for me, if you want to adjust the stop pricing as far as that up or down level, you can do that. And then click on more if you want to create an advanced order, which I do recommend for new traders. Go ahead and add to the order. And then you're going to hit review for this. And again, do the same thing. You can modify this limit price up or down on what you would see fit. And then once you feel like you have it exactly where you want it, go ahead and hit done and then hit review. And now you'll see the order confirmation that pops up as basically saying, are you going to essentially have the risk set for what you want, understanding liquidity, all the expirations and everything that you see. So if this looks good to you, then you're going to go ahead and hit send. Obviously, I won't do that. This is just an example. Okay, so this is how you would place a standard stop. Okay, so let me go back and I'm going to hit cancel. And let's say, for example, you're like, okay, I do want to have a stop put in, but I want it to be a trailing stop. So you're essentially going to follow the same steps. I'm going to hit next again. Now, instead of having it set to stop, I'm going to go ahead and hit trail stop. And you guys can see here, they have the mark as the plus or minus. You can choose to have it as the last bid ask. Any of these things would work. Okay, and then you can choose to set this to either the percentage or the dollar amount, or it can be incremental. It's totally your choice on what you choose to do for that. So let's say we want it as a percentage, you can leave it. Again, if you want the dollar amount, go ahead and hit amount. And then, of course, you can go ahead and have it set to more, create an advanced order, click on it, and then, of course, add your modifications for this as well. Once you feel like you've made any changes you feel are necessary, go ahead and click on done, and then hit review once again. And now it's pulling up the same thing. It's kind of showing you what you have for your order confirmation. So you can either choose to modify if you want. You can hit save if you feel like that's necessary. You can go back and edit for anything you feel like I want to adjust. If you want to go up or down, you can do that. And then it'll show you what you have. And you can continue to kind of play around with it. And you guys can see here the max profit changes right here as I pretty much edited this. Let me show you guys again. So you guys can see how if I go up or whatever with this, if I hit done and then review, the max profit dropped to $79.50. So let's go back and I'm gonna show you guys again. Let's say you move it downward there, hit done, and then review. Now it goes to $78. So again, you gotta play with it to understand exactly what you're doing. I never want to dictate what people put in for their entries, just because I know people's money is like something they love to protect. So I never tell anyone what to put for any of the order entry like numbers. You guys stick to whatever works for you and your account. Okay. So yeah, that's that. I'll keep that there. So for the most part, I pretty much covered everything. I do want to have you guys, again, take note to remember the trailing stop is more easily able to retain your profits or limit a loss. So that's the key takeaway. As long as the price of the stock or ETF moves in a positive direction, for this example, of course, the trailing stop, of course, moves with it. However, once it drops, of course, the trailing stock will be locked in at that set dollar amount. Okay, so this is just to protect you from any unfavorable loss. But the two things to also keep in mind about a trailing stop are that if you set your margin too big, you can force greater losses. But if you set the margin too small, you may miss out on profits. So keep that in mind as well. I also want to mention you should always be given a fair chance to make sure that the stock kind of like plays back into your favor. So sometimes it's important to trade through the dip. This way you can kind of like have the stock correct itself. Because we do know the price motion of some of these stocks can move very, very rapidly. So if you're a beginner, take some time to figure out your setups to know the prime price margin. That way you can set your trailing stop or either your stop loss at what makes the most sense. For me, I always keep my margins for a loss in the range of anywhere from 5 to 15% on any given trade. So yeah, the last thing to note is that the position is sold at the market. And this guarantees that it will sell, but it does not guarantee a dollar amount that it'll sell at. So that'll pretty much do it for this video. If you found this information helpful, feel free to leave a comment down below. Thank you so much for watching, and I'll see you in my next one.